All right, morning everyone. Welcome to another episode of Market Trading. I'm your host, Tone Vays, coming to you live. It's 11:15 New York time. Markets are fully open. One of my New Year's resolutions is to start waking up early and going to the gym again and doing these videos earlier, but they may not be every day. And keep in mind, this content will move to the Financial Summit YouTube channel sometime this year. Hopefully sooner than later, because this channel is grossly shadow banned, and I don't even have ads up anymore. So we are going to start thinking of starting a financial network, the Financial Summit YouTube channel, and we may be looking for good traders to join that Financial Summit YouTube network. I'll keep you guys posted. And am I live? I am going to get new internet here in Panama, I promise. I don't know what's happening here. Oh, I am live. Okay, good. All right. Okay, let me just open it on YouTube so that I can see what is happening. Zoom is not doing it automatically for me anymore, which is annoying. And I'm just going to have to mute it once it loads. I got to get fiber optic over here. Hope my building is wired for it. Okay, here we go. Let's go to the charts. All right, here is the weekly chart. It looks absolutely incredible. You know what people are not noticing? No, sorry, that's a monthly chart. My bad, not a weekly chart. Based on a monthly scale, we can have like the 5th highest monthly close in Bitcoin's history this month. If we close over here, it would be 1, 2, 3, and 4. If we close above $47,500, it would be the 5th highest monthly close in Bitcoin's history. If that is not bullish, I don't know what is. This should be the weekly chart, not the monthly chart. And on the weekly chart, everything is moving according to plan. Look at this arrow that I drew in the very beginning of December. And what I said in the very beginning of December was I anticipated the price to be at 48,000. So there's a couple of things where YouTubers like myself need to be careful, right? I just don't care. I do tell you my opinion of where I think the price is going. However, that may not be necessarily, I mean, I don't know what's going to happen that way, right? So the trades that I would put on could be very, very risk averse. And by risk averse means very, very conservative trades. Just because I'm expecting Bitcoin off of this green star candle to rally all the way to the 61% Fibonacci line doesn't mean that it's going to happen. But I don't remember exactly what I said the moment this green star showed up on the week of November 20th. But I can tell you what I was supposed to say. What I was supposed to say is, I do not believe in the 50% Fibonacci line being critical resistance. However, I do believe in the 61% Fibonacci line being critical resistance. It just so happens that the 61% Fibonacci line coincides with a prior swing high at the same line, which obviously did not exist at the time. At the time, this probably would have been the 50% Fibonacci line, which I'm not all that high on. And we can check this by doing this. And wait, which one is? No, it was a 32%, which is amazing. I love the 32%. 38%, not 32%. The 38% Fibonacci line is my #1 rejection line. This is absolutely perfect. Look how this top was the 38% Fibonacci rejection line. I am not a Fibonacci expert. I will be the first to say that. However, I have my own way of trading Fibonacci's. And the way I trade Fibonacci's is I treat the 38% Fibonacci rejection as a high probability rejection to go to new lows, which is exactly what happened on the rebound from January 24th of 2022 into March of 2022. It was a rejection at the 38% Fibonacci line, which drove the market to new lows. I'm a believer that when the 38% Fibonacci line rejects the price and reverses the price, you are in for a shitty time if you're a bull. However, the 62% Fibonacci line is the complete opposite of that. I never anticipate the 62% Fibonacci line to reject the price into new lows. I think the probability of that is incredibly low. However, I do anticipate the 62% Fibonacci retracement to bring us down to the 38%. Well, hold on. Here. That is how I trade Fibonacci's. And the 50% Fibonacci retracement is kind of there, but I find it to be somewhat irrelevant. And I don't see Fiboswani here to yell at me. He's the Fibonacci trader. But I personally do not put too much emphasis on the 50% Fibonacci retracement line. I also do not put too much emphasis on the 78% Fibonacci retracement line, and not paying attention to this line has, bit me in the ass several times. So I now always keep the 78% Fibonacci line on my charts, just like I keep the 50% Fibonacci line on my charts. But I do not expect much from these lines. But I do expect a lot from the 61%. In addition, you are looking at an MRI warning candle. So next week is the MRI top candle. And what else is going to happen next week? Next week is when the SEC is supposed to make announcements about the Bitcoin ETF. And I have been very, very clear over the last month at least that I do expect Bitcoin to rally into 48,000. And no matter what the SEC says, I expect it to be a sell the news event. Now, does it have to be a sell the news event? No. And can it rally for 24 to 48 hours after the event, after the announcement? Absolutely. And right now, I remain bullish. And let's go to our allocation. I don't understand this gap. I think once this candle closes, they're going to, fix this. It's an end-of-year candle. This gap's weird. I don't really know what's going on, but the price is accurate at 45,000, so that's good. We rallied all the way to 46,000 today. How close is 46,000 to 48,000? Fairly close. Do I think that, well, this is obviously not happening anymore, though it can. I'm not going to remove these arrows yet. I'm going to put a line at 48,000 is this breakout line, but I have a new breakout line here. So how likely is it that the price will rally to 40,000? I actually still believe that it is likely. If this had hit 47,500, I would be like, okay, the rally could be over. But it hit 46. It immediately pulled to 45. We're continuing to pull back below 45. And I don't like the fact that we broke out above this channel, off the bottom of the channel. I'm not necessarily happy about that, but it's okay. However, we do need to make it to approximately 48,000 in order for me to have confidence that on a pullback from 48,000, 48,000 is actually potential support. Actually, I am going to delete these arrows. They're just in my way. I do think that from 48,000, we will go lower than 44. But the very first area of support is 44. And if this happens slowly, the moving average may actually make it into this zone. The moving average will do something like this. In which case, you will have double support. You will have the camera a bit. You will have the moving average support and the prior double top or triple top, however you want to call it, support. Let's move on. Short-term chart. Let's talk about the short-term chart. Had I been trading the 1-hour chart, where would I go long in a trading contest? Well, let's look at the green stars. I would be going long here. Well, let me do it this way. I would be going long from this green star, but at no point did I close with a red star. And then I got another green star. So I could add to my bullish trade, and it's on a daily MRI buy. So I'm in a bullish trade all the way into this MRI top. Now, this MRI top gives me one of the most bullish candles imaginable that also breaks a ridiculously critical resistance level. So while I can take some profit on this MRI top, there's absolutely no reason for me to take the entire trade off the table. And if I do take profit on this MRI top, when am I willing to put that profit back in? On the next green star, which showed up around here. Now, another green star. And this one is really annoying. Only one candle. Remember that spirit, spirit concept I used to talk about? This would have been an MRI top had this candle closed a little bit higher. However, it was also a green star candle, so I'm happy to once again go long in the trade right here at the top. And when is that trade ending? Well, it's going to end right there. Okay, so right here on this red star candle, I am exiting the entire bullish trade on the 1-hour time scale. Based on the 1-hour time scale, I would not be long in this market. In fact, I would potentially be short in this market on the 1-hour time scale as of this red star candle. And I am now looking for lower prices. We have just 3 more hours to go. 1-hour MRI buy. And if the price of Bitcoin falls to the prior area of support, which is around here, I would be very, very interested in picking up this support area with an MRI. So, I mean, I don't really want to see Bitcoin fall all the way to 44,000 right now. But if it does, that'd be great. Right into an MRI buy, and then bounce right off that line to move to 48K. Zazo, thanks for joining me, brother. Now, on this rally, you can see that the GBTC discount is not moving towards 0 today. So the rally is just not strong enough. But man, if we rally for the next 3 days, I promise you this. Well, I can't really promise you. I am very finally break that 5% area and towards the 0 bound. I don't really need these anymore. I'm not even sure. You know what? I don't really need them, but I'm gonna add one more. Let's copy this. Let's paste this because, wait, what the hell did I do? Zoom in over here. Oh, better aligned, right? There. And in these. I mean, I thought I copied this one, right? Thing over there, I wanted to paste in here. Weird. Really weird. Let's do a vertical line. There. Okay, there you go. Make it purple. And we're in business. Okay. So there it is, a little high. Bam. So you see how the discount, well, I should move it one bar to the left because that is the real top. And you can see how it matches the very top candle. So the next time Bitcoin rallies for like 6-7 days in a row, I'm expecting this to break. We're going to keep an eye on. Natural gas. I still. Oh, crap. Did I go offline? Did I go offline? Am I back online? Panama internet sucks. I think I'm back online. Should be back online. Hit the like button if I'm back online, guys. We're at 325 viewers. That's great. Oil is making a new low. I do want to talk about that oil article. I do want to talk about oil a bit. Yeah. What's talked about the government budget. I got to do some more analysis on that. Yeah, there's nothing I can do. The Tigo is a very shitty company, and I'm gonna look into a better company for my Panama internet because I'll be here for a while. Plan to be in Panama for a while. Might travel Latin America. Is those weekly chart. S&P hits a number and goes down. You should be surprised. It fell a bit this morning because the market went down big. Waiting on the MRI to load. And there it is. As I stated, I would be out of the stock on this MRI because it's a doji. An MRI up alone may be a deal, but there is a giant difference between this and this MRI up. This is why trading is not like you have to be smart and use your brain and think, right? This is a bullish candle. This is a reversal candle. This has an extension C. This does not have an extension C. This comes after a crazy run up in a short amount of time. Okay? This was a 15% rise in 5 weeks. 1 week in October, 4 weeks in December into early January with a bunch of holidays in between, right? So this is 5, maybe a little bit more weeks for a 16% run-up. Now we go here. This was a significantly smaller run-up of only 9.5%. It closed on a very bullish candle, and it did not have an extension C. This MRI top is not the same as this MRI top. This is a lot weaker of a signal for reversal. Even if you go all the way over here and you measure it, and you say, okay, it's the same 16%, but this went from mid-March all the way into mid-June. This took 2 months. This didn't take 5 weeks, it took 2 months, okay? Also, this took place for a long consolidation. This took place after a quick pullback that bounced perfectly off MRI support. So this MRI top, and this is happening at the end where people want to take their, profit tax reasons or reset their portfolios. Okay. This is only going to be a 1 to 4 week correction, very short. In a perfect world, we would the next month all the way into this top. And from there, rally to new all-time high that way. And finally break 5,000. This will be a perfect S&P 500 move based on the MRI. Happens, I don't think the S&P is going to fall that much, but right now I would not be long in the S&P, and obviously NASDAQ is going to look very, very similar with an even more of a reversal candle. This is a classic doji candle with a fat tail on top, which makes it even more bearish than usual. Huge, huge bearish signal. I would wait for the daily MRI buy. Everyone shiner and pull. Just a quick word on Cardano. I talked about all the other shitcoins except Cardano yesterday. This is the monthly chart of Cardano. I expect this to be the all-time high in Cardano. Now, they do have a bazillion million coins, and one guy owns almost all of them. So if people want to be stupid, that's okay. And I'm expecting this area to be major resistance for Cardano. Thanks, Dance Crystal. It takes me, I'm very slow at reading Russian. Thanks, man. We can look at Shitlink for a second. So on a weekly scale, we do have a potential green star candle if current candle starts trading above last week's candle. So the moving averages we're above the moving averages. I'm anticipating this to be a rejection and Cardano to fall. However, I'm not that confident in the statement. It's unfortunate that Cardano never made it to an MRI bottom, second consecutive MRI buy, because this red star candle would have had me super bearish on Cardano. I would have been a huge bear shorting Cardano right here on this week, and that trade would have been a losing trade because I would have had to take the stop loss sometime the first week of November. Oh, sometime in the month of November. This is a monthly chart, not a weekly chart. Let's go to the weekly chart. The weekly chart did give us an MRI top. Now, the MRI top is happening in consolidation. When an MRI top happens in consolidation, I don't really like to short the consolidated MRI top. However, this MRI top happens to be a monster reversal candle. And the current candle is trading below the body of the reversal candle, but not yet below the low of the reversal candle. I would stay patient. And if current candle starts trading below the low of last week's candle towards the end of current week, I would have a lot more confidence in shorting Cardano or anticipating Cardano to go down. However, Cardano is now above all of its moving averages. The moving averages are crossing. So this area is an area of support. So what you have in Cardano is an area of resistance, which should be red here, that rejected the price as it was supposed to. You have horizontal resistance, but it's also a shorter term double top, which is bullish, but it's still a rejection of a prior support, which is bearish. I can make the arguments for both sides. You have really clean support right here. So this is going to be green. And what could end up happening, is there like a head and shoulders like thing or not really? No, you just got to draw it with triangles. That's okay. So what could end up happening is one of these head and shoulder patterns. Inverse head and shoulders, whatever you want to call it. I'm going to delete all this in a second, right? So if this area does become support, you could end up in a very bullish situation for Cardano. Now, I hope that doesn't happen. I don't think it's going to happen, but I'm not ruling it out. So it is possible for Cardano to find clean support in this area of, Jesus Christ, this is such a piece of shit. 0.00001165, whatever. And it's possible that it can find support here, go up, and then have a ridiculous rally. Because if it can do that, it can really, really take off. But I would not bet on this until after it finds support and after it comes back and breaks this resistance line. Okay? So I hope that doesn't happen, because I think this project will eventually just get deleted from the internet, and people are going to lose a lot of money like in BitConnect. All right. I'm going to delete all of this. I don't need all of this cluttering my charts. I think that was a longer dive into Cardano that I should have done. And the only other one I'm going to look at is Shitlink. Well, you can clearly see the MRI rejection on a weekly scale. We are moving our way into a new weekly closing low. This is a very different looking chart than Cardano. See, this one is below these moving averages, and it does have support at the longer term moving average. It made a double top right there, which is a bullish sign. So, however, if I'm going to delete these lines, I still expect it to go to 0, because this is a totally useless project that nobody needs whatsoever. If Cardano is to break below this moving average and then below the samurai support line, Cardano is in Shitlink is in very serious trouble. It had a beautiful MRI buy opportunity right here. And someone asked, I do use the terms MRI buy and MRI bottom interchangeably. There is no difference between the two whatsoever. I need to be more consistent. I need to just call it an MRI bottom, not an MRI buy, because I don't want to give people the impression that you have to buy on this candle. But buying on this candle would have been great. And you can also a monthly MRI bottom as well, which led to a 1 to 4 month correction. And I think this correction has ended. I don't like the fact that it created a double top, but on a monthly scale, it is not a double top. On a monthly scale, what you have is a very beautiful downtrend like this. Would have been better if this was a little higher, but a beautiful. So yeah, and 3 lower highs. But on the downside, you have this. So to me, this is incredibly bearish, and I'm anticipating new lows for Shitlik. I'm just going to delete these things. I'm going to draw them the same way every time. Okay. Next. Yeah, let's talk about legit projects and companies. Mining stocks. Bitfarms. As you guys know, Bitfarms is my favorite mining company, with CleanSpark being my second favorite. Publicly traded miners. Bitfarms is down today. I would love to see Bitfarms pull back to $2. And I think that would be a very good buying opportunity for Bitfarms, assuming the price of Bitcoin is reversing as well. The peak at Bitcoin rebounding again. It is not. Okay, let's talk about that oil article real quick. I thought I pulled it up. Where'd it go? Stop that oil article. No, that's not it. Sucks. Iran is also a good mining company. I'm not familiar with Iran. Oh yeah, DXY, right. So I'm not sure why this isn't loading. Here we go. Here we go. How come Bitcoin goes up but mining goes down? The stock goes down. Overall stock market is down. Guys, you have to understand the dynamics of the market, okay? The majority invest in the majority of human beings invest in NASDAQ. And when the NASDAQ falls, when companies like Facebook and Tesla and NVIDIA, any letter ticker falls, 4-letter tickers are in the NASDAQ. Facebook literally NASDAQ by changing their ticker to a 2-letter ticker. I remember that day. I remember thinking to myself, I remember the day was coming when Facebook did, and they changed their ticker. I forgot what it was. Now it's Meta, right? But I think the ticker is still FB, or is it Meta now? Let me see. Hold on. So, stocks. They changed their ticker to Meta. But prior to Meta, their ticker was FB. But prior to FB, right? Someone else took the FB ticker, but it's on the Filipino exchange. But when I type FB, let's see if it redirects me. It does not. It takes me to a Filipino company on the Filipino exchange, okay? Prior to FB, Facebook had a 4-letter ticker. I forgot what it was. They were changing their ticker to 2-letter. Remember, and I was working at Wall Street at the time. And I remember saying to myself, every single stock in the NASDAQ, I bet you they spent months with NASDAQ trying to make sure that there will be no technological issues in the entire NASDAQ when the day that Facebook changes their ticker. And lo and behold, the day Facebook changed their ticker, there was an issue with the NASDAQ exchange. And no one ever admitted it, but me as a database guy on Wall Street, dealing with this kind of shit, you know, writing store procedures and managing databases, I'm like, I bet you it was fucking Facebook that broke NASDAQ that day. Because the idiots wanted to change their ticker from a 2-letter to a 4-letter. Anyway, So anytime you see a four-letter ticker, you can assume by default this is in the NASDAQ. It is also potentially in the S&P 500. It's probably also in the S&P 500, right? But and if it's a big name, it's in the NASDAQ. So the majority of the people in the NASDAQ 100. And when the NASDAQ 100 goes down, you know, all companies in the NASDAQ go down. And guess what? Bitcoin mining company, you can, so it is very likely in the NASDAQ. HUT is a three-letter ticker, so it's very likely not on the NASDAQ exchange. Now, there's only like 3 or 4 exchanges. Now, HUT could be like this used to be like almost a rule, but it's not a rule anymore. Like today, you can't have 3-letter tickers, 4-letter tickers on the New York. Confuse the New York. Don't go stack New York Stock Exchange with the S&P 500. S&P 500 is an index. New York Stock Exchange is an exchange. NASDAQ is an exchange, but the NASDAQ NDX is also an index of the top 100 companies that trade on the NASDAQ exchange. Now, the S&P 500 is not an index of the top 500 companies on the New York Stock Exchange. They're an index of the top companies, okay, which could be either on the New York Stock Exchange or on the NASDAQ. There's also the Philadelphia Exchange. And the Dow Jones is not an exchange. That is only an index of the top 30 companies, most of which is actually on the New York Stock Exchange, and a few of them are on the NASDAQ. So people trade the index. And when the index goes down, almost everything on that exchange goes down. So even though Bitcoin is up, the fact that there is pressure on every company on that exchange will drive that company down. So this is why Bitfarms could fall on a day where Bitcoin is rising. Okay, does that explain it? I mean, I've never actually talked about this before. Mike keeps cutting out. God damn it. Okay, what do we do here? What do we do with the microphone? I'm on my USB port. How bad is it? Moderators, tell me how bad my microphone situation is. Somebody wants me to elaborate on a war with Serbia. Oh boy. That's a long conversation. So the question is, why is MicroStrategy rallying more than Bitcoin? MicroStrategy has a lot of Bitcoin. So I can switch my microphone to my webcam. Let me know if this is better. Let me know if this is better. I'm on the now using my camera microphone. All right, glad that made sense. So if we go to indices, right, just the Dow Jones is an index, NDX is an index, S&P 500 is an index. But if you type in NASDAQ, you get the entire NASDAQ composite. And the NASDAQ composite, you can't trade the NASDAQ composite. The NASDAQ composite is an aggregation of every single stock on the NASDAQ exchange, which is thousands of stocks. You can also look at the New York Stock Exchange. New York index of, no, New York stock. I mean, I don't know what the ticker is for that. But you can do it. You can do it on other places, right? Like NYSE. New York, there it is, there it is. NYSE Composite. This is every stock on the New York Stock Exchange, which is thousands of stocks. Maybe even, 5,000 stocks. Every stock on the New York Stock Exchange. Okay, beautiful MRI tops. Look at that, boom, boom. And also, don't confuse the Dow Jones average with the Dow Jones company. There's a company called Dow Jones, Dow Inc. Okay, this is the tradable company that makes the Dow Jones index. And S&P also is a company. S&P, what is their ticker? S&P, Standard & Poor's, the company. You can find it. I forget what the ticker is. Yeah, it does get a little confusing, but when you're a consistent trader, it starts to make sense. And you can see Dow Inc. Well, okay. What else are we going to talk about? Oh, the dollar, the US dollar. Anytime I start talking about currencies, it gets me into the political discussions. I bet you that's an MRI buy. Oh, beautiful. Oh my goodness. What a beautiful MRI buy in the dollar on a hammer candle. This is as textbook as it gets. We also made a higher low, which is very bullish. I don't like the fact that we broke some support levels, but I think the US dollar will now start to significantly rise. Okay, Brian Kelly, thanks for posting in the Q&A group. Hi, Tone, at some point, would you share your system and take a profit on swing trading? Example, under the current fundamentals, if you bought Bitfarms at 50 cents, how long would you let it ride? That's a great question. So if you really want the answer to it, and you have $250 to spare, the answers to all your questions are right here. Risk and position management. I spent about 5 hours answering your question. Okay, I have dropped the price to $250
without mastery of risk and position management.
Oh, didn't mean to do that. Or ideally, you really want to buy the double feature of both of them, of my education and technical analysis and risk management for $400. You can also wait until next Thanksgiving, Black Friday, where I will drop the price down to 200, and probably 350. Okay, so you can wait 11 months. I know $400 is a lot of money for people, and I promise I will continue to lower the price until it gets to zero, but it may take another 5 years. But I will directly answer your Bitfarms question. Where are we here? That's NASDAQ. Here we go. Nope, here we go. So I'm probably gonna have a lot of annotations here. Let's assume you bought Bitfarms at 50 cents, okay? This is the weekly chart. So we're gonna use the weekly time scale. I'm gonna delete all of this, and I'm gonna go through Bitfarms of how I would have done it on a weekly scale. Had it been a daily scale, it would have been very, very different, okay? This I can leave. So you bought Bitfarms at 50, which means you either bought it the week of January 3rd or the week of January 9th. Let's assume you bought it at the very bottom
of here, okay? Or let's assume you said 50 cents, right? So you bought it here. What would happen? Well, I would be long in the stock from here to here. And right here, we're getting rejected by, so let's do this. I'm going to do it with circles. You bought Bitfarms here. I would have exited that trade completely somewhere over here. I don't know where because I didn't. I mean, I did have the trade, but it was with options and it was very different. Okay, I would have exited somewhere here. Okay, I'm going to make this blue. And I will explain why I would have exited there. There's multiple reasons why you would have exited there. First off, it's being rejected by the MRI resistance line. Second, you have just gone up a shit ton. You finish your 1 to 4 candle correction to the upside and you're pulling back. The worst case scenario, I hold it till the end of this candle, the week of February 27th, where it closes a red star candle. Okay? When is the next time I'm going long in the stock? The next time to go long in the stock is somewhere here. Okay? Why? There's not going to be any red circles because I don't think at any point I would take the short, but we'll see how I get there. So over here, you have a green star candle. You broke the resistance line. You have consolidated all the moving averages. You are now holding the moving averages. And the worst case scenario for going long is this green star candle breaking out above this entire monster consolidation. So on this week, you're going long. When do you take profit from that trade? Well, I would take profit on the MRI sell right up there. Okay, this would be where I take profit and potentially even short Bitfarms. So it's the only opportunity to short Bitfarms. Is it kind of risky? Yes. Now, as I'm shorting Bitfarms on this MRI top, where do I expect it to fall to? Well, I'm only expecting it to fall down to this support area. But as it continues to go below the support area, where would I absolutely stop shorting the stock and take my profit off the short or go long? This is incredibly simple. It is right here on this MRI buy. It's simple when you get back in. The challenge is holding that trade. And this is where the problem comes in. The problem shows up right here. The problem shows up on this red star candle and this following doji candle consolidating below the moving averages. And this is where my bullish trade in, this is where my bullish trade in Bitfarms gets completely fucked. This is where my trade is screwed. Not every trade is going to be perfect. This is where it's messy because that's a weekly red star following an MRI buy telling me that I'm expecting Bitfarms to fall. But then things reverse. And as things reverse, I would have loved for this green star to be on this earlier candle. This trade, I probably would not have shorted it again, but I would have lost on my long trade. And the next time there is an opportunity to go long is the breakout with this candle or the following candle. But on the following candle, I would have felt like I'm following in and chasing the trade. So now I would have, if you're still holding this thing at 50 cents, I would not panic. I would not get out of the trade. I would hold this long until one of two things happens. Either it goes below this and gives you a red star candle, because remember, next week, you do get the price flip. It's going to go into a red one, and the following week, you're going to go into a red star if it goes down. and it would go below the moving average. Or you wait for profit take opportunity on the next MRI top, which is only 3 more weeks away. Okay, that was a long explanation, but a short explanation compared to the $400 course that you can buy that goes into way more detail on what I just explained. You think Coinbase will follow Bitcoin and keep going up during next year or two? Yeah, probably, unfortunately. So Gavin asks, how will a spot ETF lead to a new price discovery if volume on exchanges is reduced due to asset managers holding Bitcoin? Would Bitcoin become more volatile on exchanges? Yes. The answer to your question is yes. It will become a lot more volatile. However, when the price of Bitcoin goes to, say, $250,000, then the amount of money on those exchanges will be higher than the amount of money it had on the exchanges last year when the amount of Bitcoin on the exchanges was higher. So as the value on chain increases, you get more liquidity because Bitcoin is $250,000 each. So you only need a few thousand Bitcoin to maintain the same amount of wealth on the exchange. So this volatility will eventually spike Bitcoin in something referred to as a God candle. And I think the next God candle will be a $10,000 candle in a single day. Like when you get a $10,000 candle in a single day, you will 10x, not 10x, but you will no, what am I saying? You will increase the wealth on the wealth of Bitcoin on the exchange by, say, 20%. But during that time, yes, there will be volatility. It will be very, very easy for a whale to crash the price. But eventually, after the whale, oh, here we go, they fixed the candle. Maybe TradingView is watching my YouTube channel. See, eventually, like as the amount of Bitcoin on exchanges goes down, a whale on the exchange can crash the price. But eventually, the price of Bitcoin gets to a high enough level that the whale is no longer able to crash the price. And in fact, one of the whale's attempts to crash the price will have another whale counter trade him and create the God candle by completely screwing the guy trying to crash the price, like an SPF, for example. There's always a bigger fish. So this candle here, for example, even though it's a weekly candle of $6,000. We can go to the monster daily candles. Here is a daily candle of $3,000. Here's a daily candle of $2,000, and here's a daily candle of $2,000. We've had bigger daily candles at some point, probably back in the good old days of 2021. This is a $4,000 candle. This is a $5,500 candle. Four. So we've had several candles of up to 5 grand. Right here, what is this? 5.5, that's the 5.5, and that's a 4.2. So a $10,000 daily candle is coming. Eventually it'll be here. Then imagine if you get 2 or 3 of those candles in a row. Suddenly the wealth on the exchange skyrockets, and it's a lot harder for a whale to move the price. Okay, am I finally going to be able to talk about oil? Let's talk about this. If the Wall Street Journal is going to open the article for me, which it may not. But, okay, let's talk about this real quick. Senile in chief is pictured. Let's go. Since I'm fully dyslexic, we're going to let AI read
America's newest oil trader extraordinaire, Joe Biden. Oil prices have sputtered since the U.S. began selling its stock.
Oh, wait, we got to read the title again.
Commander-in-Chief, oil. Meet America's newest oil trader extraordinaire, Joe Biden. Oil prices have sputtered since the U.S. began selling its stockpiles. Head of State, Commander-in-Chief, oil trading whale. President Biden's unprecedented release of oil from the U.S. petroleum reserves in 2022 turned the White House into an unusually active player in the volatile crude market. The flood of emergency supplies helped arrest surging oil prices after Russia invaded Ukraine and pulled billions of dollars into the Energy Department's coffers in the process. Oil prices have sputtered since and allowed officials who sold high to start replenishing U.S. stockpiles on the cheap. The question that will echo from Washington to Wall Street in 2024 is how the Biden administration might finish off a trade many investors would envy. The Energy Department says it has already snapped up about 13.8 million barrels of crude, with accelerating deals in recent weeks signaling the agency could move more aggressively in 2020.
Let's fact check this. The Energy Department says it has already snapped up about 13.8 million barrels of crude with accelerating deals in recent weeks, signaling agency could move more aggressively in 24. I have all the data right here. Let's look at what happened in 2023. In the year 2023, right here, 1, 2, 3. In the year 2023, the Biden administration has sold 19 million barrels of oil that year. The article states that the administration has bought, say, 14 million barrels of oil. Okay, that's a cherry-picked number because in last year, they sold 19 million. And the year before, they sold 221 million. And the year before, they sold 44 million. So where is that 13.8 million number comes from? Let's take a look at recent history. This was a very dyslexic moment. The Biden administration started buying oil. Let's look at the beginning of 2023. 2023 begins right here. The first week of 2023, they sold 800,000 barrels. This is in thousands. This is, I think this is 1.6 million barrels. Yes. So let's not even factor this in, okay? They started selling oil in the beginning of the year. They were selling oil until July. And as of August, they started buying oil. For some reason, in September, they sold some oil, which is very weird. But let's see how much, let's add these numbers up. And here they sold 6,000 barrels. If we add these numbers up, you get the sum of 6.5 million barrels. If you look at the bottom right-hand corner, it shows you the sum of 6.5 million barrels. So in what alternate reality is this Wall Street Journal writer getting this number out of their ass? Because I don't understand where he's 14 million barrels of crude. Now, it is possible that they bought it in futures contracts that I don't have that information. And this oil will eventually, show up in 2024. But according to the hard numbers of what is actually inside the Strategic Petroleum Reserve, I don't know where this is coming from, okay? All I can say is that since last summer, the Biden administration has purchased 6.5 million barrels of oil, while for the entire year, they still managed to sell cumulatively 90 million barrels. But let's go on. This is what I mean. This is such a crazy, crazy article.
24. At an average price of $75, and the Energy Department says it has already snapped up about 13.8 million barrels of crude, with accelerating deals in recent weeks signaling the agency could move more aggressively in 2024. At an average price of $75.63 a barrel, the purchases so far total a nearly $270 million theoretical discount from 2022's average sale price of
Oh, sorry, let's pay attention. My bad. I have to redo this.
$95 a barrel. At an average price of $75.63 a barrel, the purchases so far total a nearly $270 million theoretical discount from 2022's average sale price of $95 a barrel. The Energy Department will have about $3.45 billion left to buy more oil after those deliveries are complete, a spokeswoman said. That is enough cash for tens of millions more barrels of crude. The Biden administration's opportunity to build on its gains could slip away if prices rise. Benchmark U.S. crude changed hands Friday at $71.65 a barrel, well below the administration's asking price of $79 or lower, even as fallout from the Israel-Hamas war threatens tankers in one of the world's most important shipping lanes. Any major ramp-up in deals would come with challenges. It could strain the country's ability to release emergency supplies, because storage sites can't accept crude at the same time. The facilities, some of which are currently undergoing maintenance, are also limited in how much they can receive each month.
Okay, let's review. So they're saying that the Biden administration, at an average price of 75.5 a barrel, the purchases so far total nearly 200 million theoretical discount from 2022 average sale price. So what they're saying is the Biden administration, when they sold 221 million barrels of oil, right here, when they sold 221 million barrels of oil in 2022, the average sale price was $95. Right. This is the Biden administration's average sale price. Okay, according to the article. I should label that. You know what? Let's do this. Right here. I'm going to trust that the article is accurate on this number. Average Biden sale price of 221 million barrels of oil. That's a lot of oil. So that's the average sale price. Now, the Biden administration, in prior public statements, I have them here. Here it is. This is a statement from October of 22. Oh, wow, that's old. Department of Energy has finalized. I really don't like to read. I really like this app. I can take a screenshot on a picture and it'll read off the picture. I hope. Maybe. Well, my computer doesn't freeze anyway. This is not working. I think my shit froze. Oh, here we go.
NOAA has finalized a first-of-its-kind rule that enables it to enter into fixed-price contracts with suppliers through a competitive bid process to repurchase oil for future delivery windows. This new authority will shore up demand for oil when supply is less. For example, if the market were to price barrels for delivery in mid-2024 at $70, the new will enter into a contract now for mid-2024 delivery of oil at around or lower than that price. NOAA plans to use this authority to enter into contracts to repurchase oil for the SPR, targeting a price of about $67 to $70 per barrel or lower, with initial repurchases being delivered in 2024 or 2025.
I shouldn't have moved the screen, but anyway. So in 2024, they wanted to purchase oil between 67 and is only that, hey, an average price of $7. The purchases so far, right? So far, so this is their beautiful trade, right? They sell here. They sell here. Here. They're buying here. They're buying oil back 75 a barrel. So here is their buying. I know, I lost internet again. Promise you guys, in a couple of weeks, I'm going to switch internet companies. I hope this is interesting to you guys because it's interesting to me how the world functions from an economic perspective. Let's go back. Now, see, in my head, I analyze this within minutes. But in order for me to explain it to everyone, it does take a long-winded explanation. So the Biden administration buys oil Biden average buy price in 2023 but here's the problem, right? Average senile Biden, how do you spell senile? I can't spell. Average Biden buy price 2023, but for only 5.5 million barrels while selling. Right, so they bought 5.5 million. They closed the year at minus 19 million. So how many barrels did they sell? Well, 19 plus 5.5, right? Is it 19 or 19 and a half? Let me see. 19 flat for the year. So after selling, that means they would have sold 24.5 million barrels. Okay, so this is their average buying price was at $75 a barrel. Or is it right? Really? That seems a little low. But they were buying more oil, right? So they've actually been buying oil all year long. So they've been buying oil here, just not consistently. So I'll give them this entire box. So their average buying price, they're saying was 75. I'm a little skeptical, but let's give it to them. Okay, there's their average buying price. I probably do need two boxes here. Let me see. They were buying it here, and then they stopped, and then they started buying again. So they stopped for like 2 months. Yeah, and then they started again in November, and they stopped at the end of September. So they actually stopped at the end of September. Right, so they did stop right there. They stopped buying at the end of September, and then they started buying again in November. Sometime here. Right, so these are their buying windows. And they're saying the average price they bought oil at was $75. Okay, that's fine. Let's move on. So this created, they're saying that this somehow created a $270 million theoretical discount, right? But look at the numbers. They barely bought any oil. They sold 221 million barrels in 22, and they still sold way more oil than they bought in 2023. So, yes, they made money on this trade, but they're still depleting the United States from the strategic reserve. Let's move on. This article starts to get weird in a hurry.
A $270 million theoretical discount from 2022's average sale price of $95 a barrel. The Energy Department will have about $3.45 billion left to buy more oil after those deliveries are complete, a spokeswoman said. That is enough cash for tens of millions more barrels of crude. The Biden administration's opportunity to build on its gains could slip away if prices rise. Benchmark U.S. crude changed hands Friday at $71.65 a barrel, well below the administration's asking price of $79 or lower, even as fallout from the Israel-Hamas war threatens tankers in one of the world's most important shipping lanes. Any major ramp-up in deals would come with challenges. It could strain the country's ability to release emergency supplies, because storage sites can't accept crude at the same time. The facilities, some of which are currently undergoing maintenance, are also limited in how much they can receive each month. But some traders and analysts say locking in future purchases at today's prices could help turn U.S. stockpiles into a force for market stability and expand America's clout as an energy superpower. Even if it's at a small size, being able to exert that muscle could be very valuable, said Skanda Amarnath, executive director of the macroeconomic policy think tank Employ America. The U.S. and other countries began amassing stockpiles in the 1970s, aiming to hold 90 days' worth of net imports, after the Arab oil embargo sent prices skyrocketing in an inflationary shock to the American economy. The Strategic Petroleum Reserve peaked in size in 2010 near 727 million barrels, according to the Energy Information Administration. Since then, booming shale output helped the U.S. become the world's largest oil producer, and officials from both parties pushed to sell off some of the stockpiles to fund other projects. Biden's release after Russia's invasion of Ukraine was the largest ever. Emergency sales of roughly 180 million barrels helped shrink the reserves to as little as 347 million barrels, a 40-year low. The skyscraper.
Right, so we talked about this yesterday, right? Now, the emergency part of the sale might have been 180 million barrels, but what the author conveniently doesn't mention is that throughout Biden's first 3 years, he actually sold 285 million barrels cumulatively, even though they bought some back this year. And in 2022 alone, Biden sold 221 million barrels. Now, maybe only 180 million barrels of that was an emergency due to Russia. And again, I don't understand, right? If Russia is invading Ukraine and the Biden administration swears that Russia is going to soon invade London because they have amphibious tanks that can just, move over the water, shouldn't you be stockpiling oil and not selling the oil in preparation for those same Russian tanks to move over the Atlantic Ocean and land on New York shores? So again, it's a very, very weird move by the administration. Now, I know why they sold the oil. Had nothing to do with Russia. They have to win a re-election campaign in the middle of inflation for midterm elections. So they have to drop oil prices at the pump. Let's move on. So again, these numbers are very, very suspect. And they think you're an idiot, right? Right here, they say it's 727 million, and suddenly it's 347 million, and somehow he only sold 180 million. So 727 minus 180 somehow gives you 347. Nice math there.
Precise storage caverns in Texas and Louisiana now hold the equivalent of nearly 175 days worth of net imports, according to federal record keepers. Canadian crude has also come to account for far more of the country's imports, while supplies from the Saudi-led Organization of the Petroleum Exporting Countries and its Russia-led allies have plummeted. Still, administration officials say they want to refill at least some of the reserves when the price is right. The strategy has 3 prongs.
So look at this. Still, this article was written yesterday. Still, administration officials say they want to refill at least some of the reserve when the price is right. When is the price going to be right? The price is already at the bottom of the barrel. So it's already as low as it can get, and yet they still holding out for a lower price. Let's see how it works out for a cut. Let's move on.
The Energy Department has recovered some supplies from crude lent to refiners and returned with a premium. Congress also canceled previously scheduled sales totaling about 140 million barrels in exchange for $12.5 billion from the Energy Department's account, according to the Dallas Fed.
Okay, let's read that again. Congress also canceled previously scheduled sales totaling about 140 million barrels in exchange for 12.5 billion from the Energy Department account, according to the Dallas Fed. That is a very confusing statement. Did Congress cancel sales of, they were going to sell another 140 million barrels and Congress stopped them? If that is true, Congress did something right for the first time in my lifetime. So that is interesting and more like really strange. I think this is a typo. I think this should say Congress also canceled previously scheduled buys totaling 140 million barrels in exchange for 12 billion from the Energy Department. I have a feeling this is this should say buy, not sell, but I don't know. I'm just speculating. This sentence to me needs to be completely fact-checked. Maybe we can go to the Dallas Fed and find out where this came from. This to me sounds very, very strange. It just sounds strange, right? 140 million is a huge number. That is just something's weird there.
Big purchases on the open market, relatively rare in recent decades, have proven to be the most difficult piece of the puzzle. The Energy Department's first attempt at buying oil in 2020.
No shit, right? It's very easy to sell a shit ton of oil into the market, but look at this statement. Big purchases on the open market, relatively rare in recent decades, have proven to be most difficult piece of the puzzle. So this article is now admitting that large purchases of oil in reserve have become incredibly difficult to do. And yet the Biden administration has sold a shit ton of oil. And now the article is admitting that buying it back is very, very challenging. Great job. Let's move on.
23 failed. The agency later bumped up its target price from $72 a barrel. Big purchases on the open market, relatively rare in recent decades, have proven to be the most difficult piece of the puzzle. The Energy Department's first attempt at buying oil in 2023 failed. The agency later bumped up its target price from $72 a barrel and revamped its approach to contracts to
Well, send you the information.
Not yet. All right, guys, my internet failed again. Coming back. I just want to finish this article and then we're going to end the stream. Sand Snake, I did not talk much about natural gas. If Wall Street Journal writes a dumb article similar to this one on natural gas, I'm happy to discuss it in detail. So where were we? We were right here. The Energy Department first attempt to buying oil in 2023 failed. I mean, is anyone gonna look into this? Like, what the hell happened here? Using up America's oil reserve was easy. Refilling it won't be. Okay, here we go. See, this article actually has a human being writing it, and he probably explains why I can't read this article. Paywall. I can get around the paywall, but I'm not going to do it here on live air. Anyway, clearly there are issues buying back oil, and they're stating it loud and clear for you.
evaluated proposals. The agency's most recent contract. The Energy Department's first attempt at buying oil in 2023 failed. The agency later bumped up its target price from $72 a barrel and revamped its approach to contracts to limit suppliers' risk while officials evaluated proposals. The agency's most recent contract, awarded December 26th, scheduled deliveries for March. Officials plan to purchase as many barrels as possible while getting the best deal for taxpayers, a spokeswoman said. Additional monthly solicitations are expected at least through May. The extension suggests the government is growing more comfortable with deals that have longer time horizons, said Ushuev, managing partner of Pentathlon Investments. If the U.S. is willing to expand that approach, Ushuev said it could lock in cheaper contracts for deliveries in late 2024 and 2025 and avoid the risk that prices will rise. Buy it back at $75 a barrel, claim victory for the taxpayers and call it done, he said.
Okay, so here's their plan. The Wall Street Journal article is saying that they are entering all of these contracts to buy oil at $75 a barrel or lower for the oil to be delivered in March of the year. expected at least through May. Okay, deliveries March, April, and May. So we will make a note. We will make a note from this article. I'm going to copy this into the spreadsheet right here. And I'm going to quote from that article right there. Okay. So let's see if massive buying, let's see if massive refills take place sometime in March, April, and May. We will find out, because I have a feeling this is all bullshit. They're buying a little bit because the article literally explains why they're not able to buy a lot. So let's see where it goes. Okay, on this note, I'm going to get going. I really wanted to dive into this oil situation. I'm finding that what the current administration has done with the oil reserve has been unprecedented. And even though America is a big oil producer, right, you have to realize that one of the reasons why there was a stockpile of oil in America is for disaster relief or for a potential American war. And anyone that argues, well, we don't need a big stockpile in case America goes to war, because America is a big oil producer, without realizing that if America goes to war, the first thing the adversary would bomb is our critical infrastructure, including oil refineries and the oil rigs offshore America. Now, these stockpiles are way underground, and they are a lot harder to damage and destroy by US adversaries if America ends up in a hot war with, say, Russia or China. Now, speaking of hot wars, Serbia is on the chopping block, but we'll need to talk about that next time. All right. Thank you all for watching, and I will see you all on the next one. Go Bitcoin, but looks like the current hour is not doing very well. I'm looking for this bounce, and I'm still expecting 48K. All right, guys, I'll leave you here. Hope everyone had a good new year, and talk to everybody soon. Bye, guys.